Hi, and welcome to another edition of CMS Forex News. I'm Christina Robinson, and today's Thursday, March 20th, 2008. The Eurozone saw its services and manufacturing sectors take a step back in March, according to preliminary estimates. The news is an unwelcome sign as the Eurozone economy had been resilient recently, despite slowdowns in the US and the UK. The news increased concerns of a global slowdown. Germany, the largest economy in the Eurozone, saw its services and manufacturing PMIs climb, beating expectations that they would fall for the month. The releases are consistent with recent data showing that the Germany economy has been able to weather the global slowdown better than other Eurozone economies. Inflation remains a major issue for the European Central Bank. Producer prices in Germany continued to surge in February, posting much higher than expected figures for both monthly and annual terms. The annual 3.8% increase was the highest since December of 2006. The euro-dollar pair continued to fall from the all-time high of 1.59 set on Monday. A big part of the nearly 240 pip swing came after the PMI data suggested a slowdown for the Eurozone. The pair found support near 1.54 in New York trading. UK retail sales were up 1% on a monthly basis in February and 5.5% compared to a year ago. Though the report seems positive, the main driver was a large and volatile monthly increase in food sales stimulated by Valentine's Day, whereas sales of household goods dropped by the largest amount in 7 years. The euro-pound pair slipped more than 100 pips from its open. The pound's gains accelerated after the UK's uplifting retail sales data and Eurozone's weak PMI figures. The pair hit support near 0.7770, its low from Tuesday's session. In the U.S., Americans filing first-time claims for unemployment benefits rose 25,000 up to 378,000. However, the numbers may have been inflated by workers affected by a strike at General Motors plants. Nevertheless, claims have been elevated since late January as the economy has weakened in the first quarter. The Philly Fed manufacturing levels rebounded slightly but still remain in contraction for the fourth month in a row as the economy heads into a recession. The better-than-expected result did help boost gains in the stock market. Finally, the leading indexes in both the U.S. and Canada registered readings of negative 0.3% for the February period. The U.S. composite of indicators have been in negative territory for 4 straight months now, and the Canadian index just caught up, falling from the 0.2% growth that it saw in January. The U.S. dollar-Canadian dollar pair saw another rally today, putting the pair about 380 pips higher than its low from yesterday's session and at a 2-month high. The Canadian dollar was pressured by further declines in commodity prices, especially oil and gold, 2 of Canada's main exports. Oil fell below $100 a barrel for the first time since March 6, and gold has seen its largest weekly fall in 25 years. The Australian dollar has also seen a large drop for the past 2 sessions. Eurozone's poor data today caused concerns that demand for Australia's raw materials will sag. The pair found some support at 0.8950 after a 380 pip fall from yesterday's high. Banks around the world will be closed for Good Friday, though they will be open in the U.S. and Japan. U.S. stock markets will be closed, and overall liquidity will be smaller in Forex markets. There are no major fundamental releases scheduled for tomorrow. And that completes today's Forex News. Join us again tomorrow as we wrap up the week right here at CMSFX.com.